Hey guys, today we're talking about becoming enlightened, preparing your financial statements and documents. My name is Isaiah Goodman, Chief Financial Advocate at Becoming Financial. Now, I know one of the toughest things to figure out is how do you organize, how do you keep track of all of the statements, paperwork, documents related to your financial life. Today, I just wanted to give you a couple ideas, quick tips, things to make sure you're managing and keeping track of as it relates to your financial world. One of the first things I wanted to talk about is a balance sheet. It's more of a ratio or comparison of what your net worth is than anything. It's not an official document that gets mailed to you. Credit Karma doesn't have it really, unless you're keeping track of all that stuff intentionally. You can't really go to the bank and see everything in one picture. You're either going to work with a financial professional or do this on your own. What you're going to do is take all of your assets, 401k, bank account balances, the property value of your home or any other assets that you own, subtract out liabilities, credit card debt, any mortgage payments, any other things that you owe money on, and that equals your net worth. Why is that important? Why am I going to start with that? Well, that's the whole measure of worth, of wealth, is how much is your net worth. If your liabilities are way outpacing your assets, so you owe a lot more than you have in terms of savings or investments, we have to make some changes. That's typically what I see when I work with a lot of our younger clients. They have a lot of student loans, they might have a car note, they might be on their way to buy a home, but they don't have a ton of assets actually saved up working for them. So we want to have that positive net worth, and then obviously long term, we want to grow that net worth as high as possible. So big thing there, keeping track of it. You don't have to update it every day. Maybe not even every quarter, but a couple times a year, just keeping track. How am I doing on paying down this debt? How am I doing on growing my assets? So that every year you can see that net worth climb. Next big document, or at least statement that I'd recommend to find, is a cash flow statement. So it's basically a budget. You just want to see, with the amount of income coming in and the amount of expenses going out, what's my net cash flow? So if you're making $3,000 a month, your expenses are $3,200, you're negative $200, right? Negative cash flow of $200. We need to make some changes. On the flip side, if your expenses are $2,800, we have that extra $200 that we should put somewhere, maybe in savings or insurance, putting it somewhere smart. What that net cash flow statement helps you realize is maybe things aren't lining up with how they should. If it says I have $3,000 and it says I'm supposed to be spending $2,800 and I don't have the extra $200, now you have some documentation to say, I need to start figuring this stuff out, at least keeping track of it. That's a really good starting point. If you don't do anything else because of this video, check out your net worth and check out your cash flow statement. That'll at least get you some momentum moving into understanding your financial documents. I wanted to talk about a couple other big ones in terms of your financial planning and looking at your future. One of the first ones I wanted to cover was your credit card statement. A lot of times we're getting this in email, especially nowadays. We don't get the physical document anymore, so it's easy to just say, I got my statement, I'm just going to delete it. Well, I want you to look at one thing specifically, the interest rate. And what's the APR versus the APY? APR is annual percentage rate, so they might charge 15%. The annual percentage yield could be higher or lower than that. Why? It depends on how they calculate the interest. If they calculate the interest annually, then the APY and the APR are going to be the exact same, because they're going to say, at the end of the year, we're charging this rate. Well, for a credit card, they're not doing that, right? They're going to do it at least monthly. So the annual percentage yield might be a little bit higher than that rate because they're calculating that interest every 30 days. That's why when it comes to credit cards, we help a lot of our clients figure out, hey, if I at least pay this much above and beyond the minimum, maybe it's not a ton, but I can start to eat away at some of those interests that grow and accumulate. Next big one I want you to think about, student loans. If you look at your student loan paperwork and documentation, they might have some different repayment options for you. You might qualify for a low income repayment plan. You might be able to adjust your terms. You might even be able to take that documentation, bring it to another lender, and refinance your student loans. You might be paying 8% over here. You bring it to a different lender and they say, we can give you 6%. Well, now you have the paperwork, you have the understanding to say that's going to be a good deal. Again, if you're getting those statements in the mail or most likely an email and you're not looking at them, you could be missing out on some big opportunities. Next big one to think about, 401k or retirement, any sort of investment account. You want to look at two big things. Number one, the performance. How am I doing? If you're invested in all money market or really, really low conservative assets, things like really safe bonds, long-term bonds, you might not be doing that hot. Your account might only be growing 1, 2, 3%. Well, if inflation is 2, almost 3%, you're not gaining any traction, right? You want to be able to keep track of that and say, okay, my account's growing at 5, 6, 8%. I'm outpacing inflation. The other big thing is fees. So looking on your account statement, it might be way down on the bottom or hidden in there a little bit, but how much are you paying? Is it 1%? Is it 2%? What are the fees that are being taken out of your account every year? Because that's going to adjust your returns, right? If your account grew by 10%, then you had to pay 2% on your fees. Well, now it's really like you got 8. And if inflation was 3, it's really like you got 5. So now you can start to compare and contrast and say, these investments are doing well, this advisor or this management company is doing well, or maybe it's time to look somewhere else. Last thing I want you to think about is your tax documentation. Around the beginning of the year, you're getting your W-2s, or if you start a new job, you're filling out W-4s, all these different acronyms, 1040, all these things. Make sure you keep track of it. We recommend that you keep those documents for at least 7 years so that if you ever do get audited or they have to double check some things, you've got 7 years of that documentation. You don't have to keep it in a file drawer or anything like that. Just scan it in and save it somewhere safe. But you want to make sure you're maximizing any possible deductions, so bring that to your CPA or your accountant. And then you want to be really thoughtful for any sort of planning. If you're a business owner, you want to be as efficient as possible with your taxes. And if you're an employee, you just want to make sure you're doing the right amount. There could be some opportunities there to maybe pay a little bit less in taxes every month and not get as big of a refund, but now you've got an extra $100, $200, $300 a month for your cash flow. So really looking at those documents, making sure you're double checking your taxes, your retirement stuff, making sure you're going over your student loans and your credit cards. That's going to allow you and help you to be as smart and as savvy as possible with your finances.